Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and we're going to talk about the week that was. Rate cuts. Are they good? Are they bad? Are they going to help us or hurt us? And I also want to get in a little later in the show, Jerry, I want to talk about man-made or lab-grown diamonds. I saw a great documentary, and then I started just kind of looking into some articles throughout the week, and it's going to be a good chat about just to give you some perspective on that market and what that means for colored diamonds as well. But first, you know, we're getting towards the middle of summer, right? We're getting past all of the Canada Day, July 4th type of stuff. You think, oh, we're in the complete doldrums, gold and silver, you know, sell in May, go away, all of that stuff. But that was absolutely not what happened this week in the gold and silver market.
It certainly wasn't. No, fireworks are still going off in our market. So happy 4th of July. I mean, Independence Day, we celebrated that in the States yesterday. As we're recording on Friday, July 5th, the markets are on fire, Jeremy. I had a dream last night, actually, that silver, in fact, hit $9,000 an ounce. And I'm like, something's going. I woke up and I thought this was happening. But I woke up and silver was up about 2% on the day, which is still good. Still good. So silver started the week off July 1st. On Monday at around 29.45. Today we're at 31.30, which is a 6.5 move up so far on the week. And gold, on the other hand, started the week off at low 2300s, and we're up about $60. It's a $60 move to end the week, up 2.5%. And we believe that this can continue to bleed into next week because most traders in the U.S. are still off for the holiday.
Great to see silver keeping in a tight range of that $30, that it's not letting go of that. Where are we on the year with gold and silver?
That puts silver at back to 26% on the year, and gold back to about 15% on the year in U.S. dollar terms.
Now, if I was a crypto person, I'd probably be gloating about how well the metals are doing, and the cryptos have not been doing as well. What do you think is, but we're not going to because we're not like that.
No, we can't.
But what do you think is behind the recent pullback in the crypto market?
Yeah, there was an article today, Bitcoin witnesses a crazy $624 million mystery, a little bit of wipeout of long orders, about 700 million in long orders wiped out overnight. This is on the back of some news. They have to pay back the Mt. Gox clients and customers who lost. They were actually paying that back.
But you're saying long orders.
Yeah, long orders.
That's the futures market. That's not actual buying of gold. That's the intention to, not gold, sorry. That's the intention to buy cryptos.
Yeah, exactly. So we're talking about the futures market, the ETF market. And this was supposed to be the new financial instrument in Bitcoin that was supposed to help revolutionize the market, to grow the Bitcoin market. But as us in the gold and silver markets and the industry goes, the ETF market is no good. It's artificial, it's paper, and it's artificial supply, which you can manipulate on the buy and the long side or shorting on the other side. But we're seeing that end here with gold and silver. The manipulation using these instruments and ETFs, it's going by way of the dodo because you need the physical in order to back up the contracts, Jeremy.
Yeah, you know, I think one of the things we've always talked about with precious metals is why would you... Now, there is a time and a place for something like an ETF. You know, gold and silver, it's a retail product. It's a fabricated retail product. It costs money to produce that hold-in-your-hand product. And if you want to trade in the market, so, you know, we've had a good week, good up week in the market, but maybe next week it comes off a little bit. If I was looking to trade that, I can't do that with physical. Mm-hmm. I can do that in the paper market where I don't have to overcome the cost of doing business or barrier to entry.
Right. Yeah, you don't trade your insurance policy. Gold and silver are financial instruments or financial assets, real assets for the defense against the paper systems that are at work. And as Harry Brown, who is the investment strategist for Permanent Portfolio, he once quoted as saying, when paper money systems begin to crack at the seams, the run to gold, physical gold, could be explosive. And that's exactly what we're seeing.
Oh, I think ultimately, and I know we're kind of digressing here, but yes, gold is about trust. And when you start running out of trust in the paper currencies and what they mean, you're going to quickly go to something that is trustworthy. And as we like to say, real is rare. And physical gold and silver have been around for thousands of years. They have been the go-to money. It is the real money show. And we're talking about the idea that when you have physical gold, you've got the trust. And so what we're seeing in the ETF market, to what you were saying earlier, Jerry, is that there's been a trend towards what we do here at Guildhall, which is if you can't hold it, you don't own it. And so there's been a lot of deliveries around the world of we're gonna get the physical. Central banks, they're not doing ETFs. They go out and they get the physical metal. And we should talk about the Dutch central bank.
Oh, yes.
We have to get into that a little later.
Lots of gold repatriations happening.
So, they get the physical, but the ETFs, the physical resides with the custodian themselves. And, I wonder if in the Bitcoin world, I know in the silver world, if you want to take delivery from an ETF, you can. It's very difficult. You have to be a very, very large investor. I wonder if you can do that in the Bitcoin market.
Well, no, we'll find out.
I wonder if people would say, I want to take delivery. What I said before, it's interesting about the ETFs, is that the the maximalists were so excited about these ETFs, but the people who were buying into them, it's like these are the people you don't like, right? That don't understand the technology. They don't understand how to get the wallet and all that. They just call their broker and go online and get the ETF. But now the product is with the custodian, and they can finance it, they can short it, they can
Very
go along with it.
yes.
And now you've opened yourself up all this manipulation, which I believe it's not what they were looking for.
And that was the whole point of Bitcoin to begin with, is to get out of the fiat system, to have something decentralized. And you went full circle, and you're back into the same trap. I mean, we're not dogging Bitcoin. We own some Bitcoin. We do accept Bitcoin for payment for physical assets like gold, silver, natural fancy color diamonds. But it's all about diversification. And what we're seeing right now in the Bitcoin market, as we looked at the performance of gold and silver earlier, Bitcoin is still staying pretty elevated. It's still up over 20% on the year after a very large run because of the ETF euphoria.
Yeah, let's move on to Canadian news. First, if you want to get involved in the gold and silver market, the number is 18778 silver. The website guildhallwealth.com. We only deal in physical precious metals, globally recognized brands that can be sold anywhere around the world very, very quickly, very easily. And you can also put physical gold and silver in a registered account like an RSP, TFSA, Lira, LIF, RIF, etc. Jerry, this week, Canadian Pension News got the cover of the newspapers and whatnot. They're putting in how much money into EV vehicles? I mean, we're talking crazy. What they're doing with our retirement money is an abomination.
Mm-hmm. Yeah, what we're seeing is just the Canadian Pension Plan, the CPP funding, the CCP's Chinese EV companies. And these are companies that are actually blacklisted here in Canada. But the feds here in Canada are putting $604 million. That's right, over half a billion of Canadians' pension funds in these blacklisted companies. At the same time, the Canadian government wants to protect our industry and is launching tariffs against these companies. So over there with our money, and then if you want to send something back into Canada, we're going to tariff your goods in an economy, in an industry rather, that is kind of losing some positive footing globally, this electric vehicle market.
Yeah, the electrical vehicle market is losing steam. I know Tesla did well in the past month or whatnot with some of their reporting, but overall there's been some surveys out there that says almost something like 40% of people who own EV vehicles want to go back to what they call ICE, internal combustion engines. And, another criticism has been, who wants to buy a used one when the battery for a used car is going to run you $25,000. Mm-hmm. So how much is the car itself? And then you got to replace the battery as well. There is some question as well with regard to CO2s, if that's something that you're concerned about. which is that all of the CO2 that could be, with regard to the production of it, whether it's the mining of the various minerals and metals and all of these things that will go into these vehicles, is very expensive, very energy consumptive, as well as the type of pollution that it could be causing as well. So having an electric vehicle might not be the virtue signaling thing we wish it was. Maybe that will change over time. I don't know. Right. But ultimately, we're talking about what this means to people's pensions.
Right.
And the fact is that to just be, so irresponsible with the money. I never expected this from the Canadian pension plan. Well, I mean, they don't own gold.
Right.
They won't own gold.
We tried to contact, but we were given the cold shoulder. They put a lot of money into the cannabis industry that went up in smoke. A lot of malinvestment, and we hear these from people who had pensions. They left their companies, and they're able now to find a solution with Guildhall and move the pensions into liras over to Guildhall.
I wouldn't be surprised, given the corruption of the current government, that you don't find out of the people who are involved in these decisions and how they go back and forth, and this kind of the capricious nature of how they're doing all of this stuff. You kind of just wonder, is this really where I want my retirement money to be? Now, some people can't get out of the pension, but I think the fact is can you count on it? Can you count on your pension money being there? And we're not even talking about inflation and it being the value of your money being destroyed when it comes time to retire. People are experiencing it now. I went for lunch. A hamburger I thought might be like $5 was $13.
$15.
Yeah, it was okay. That got it.
No cheese.
Yeah, I thought I was in Europe for a second. So you have to prepare for that. And we know that gold is over 500%, silver's up over 400%. Rick Rule says it could go to easily $8,000, $9,000 an ounce, right? He used to be from Sprott. So very smart people are looking for big numbers in the market. We'll get into that in the next segment. The number 18778-SILVER, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. Jerry, we don't know what could happen to our pensions in the future. We want to make sure that we're prepared. And we know that gold does protect against inflation. I get phone calls every so often. I had a phone call last Friday, Jerry. A person said, well, gold hasn't done that much. I said, really? It's up like 60% in the last 3 years. It's only had 2 down years in the last 15 years. The numbers are staggering. I mean, we're up over 26% this year. What's the problem?
He received a lot of misinformation and disinformation.
Well, the thing is you can have gold go have 4 down days in a row, and then it pops up $50 on a Friday or a Monday, and all of a sudden it's erased all of these little losses every day. And so you have to look at the much bigger picture. And of course, we can't help but be binary about these things. We want action, reaction. We want, inflation ticked up, according to the government, whatever little number they say, and we expect that gold should go up exactly the same amount. And it doesn't really work that way. I've always talked about the silver rebate. If you see inflation, 6-7% a year, that's 70% on a decade. How do you get that back? Well, if you have something that's gone up 200+%, you've done it. Right. You get your rebate on that inflation. And gold and silver have done it. It guards against inflation. It insulates you from economic issues like the stock market collapsing, which we're going to get into in a few moments. And it is amazingly simple. You don't have to be Warren Buffett and pick and choose your spots and pick and choose what you're doing. No, it's very, very simple. You simply own it. And the only thing that you have to worry yourself about and concern yourself about is, can I hold it?
That's right.
I can buy it, take delivery. If I'm going to store it, can I go and hold that product? Can I go and audit it? Can I hold it in my hand? Can I take delivery of it? What about the RSP? Can I go and personally audit my holdings at the RSP?
Number one question.
I'm going to tell you something right now. It is a absolute pain in the ass to schedule these things.
Yeah.
It interrupts your day. You're trying, but it's a pleasure. It is a pleasure because every single person that goes to that vault, right? Because you have to disrupt their day, disrupt the people at Questrade.
Yeah.
But every person who goes to the vault to personally audit their holdings is a satisfied customer.
Yes.
I have never, after 8 years of doing this, just in the registered accounts, had someone go, yeah, I was really disappointed with that experience. I thought they would have hardwood floors.
Mm-hmm. It's
It was a
satisfying,
concrete floor,
No.
and there was lots of iron, and I saw a gun.
Yeah.
Yeah. It's
because it's satisfying a concern. Ultimately, it's, Jeremy, you're a great guy, or Jerry, you're a nice guy. Thanks for your great service. But at the end of the day, there's a lot of questions out there and unanswered questions out there. So people want to make sure that the gold and silver that they own in these RSPs and liras is actually there.
Now, talk to us about delivery. Can a client take delivery? In other words, yes, we know they can go to the vault and hold it in their hand, but could they take delivery?
We are full service, so we will help every step of the way, whether it be on the logistics sides, buying and selling at the right times. Buying and selling is done on a phone call, done immediately. And with regards to withdrawing, we help with that process as well. Yes, there are hoops that you have to jump through, regulatory hoops that we will help with. We have all the forms ready to go. We take the guesswork out. We connect with our team at Questrade, who will treat you like a VIP. You don't need to call a 1-800 number and wait on the line. We'll get them in touch with you to ensure that we can get the turnaround for your withdrawals. And you can do that easily in a TFSA, obviously, being there's no tax pertaining to that account. With regards to RSPs, there's withholding taxes. There are ways to pay for those from the account. And even liras and LIF accounts, you have the option of taking 50% within the first 60 days of a LIF, of opening a LIF account, which is amazing. You could take out the money. And, some people question, should I pay the 30% withholding tax today? Well, silver's up 30% almost this year. You can feel justified taking it out if you'd like to a little early.
Profit gives you options.
It certainly does.
If you're down 70% on something, you don't have options.
No.
You're sitting there waiting and wondering, should I call it a day? The fact is when you're down on something, you're out of options. When you're up on something, you've got lots of options, and we can walk you through that. Ultimately, when you're holding physical gold and silver in a registered account or directly, you are in control, and even if we're helping you step by step, you keep control over that asset, over what you do. You have all the choice, and we just want to help people get involved in this market. We've seen some great moves. We expect big moves going forward. Jerry, I know we want to get into interest rates, but we've seen numbers in this market. I was just saying, Rick Rule, I've seen him on a few different podcasts talking about anywhere between $7,000 and $9,000 gold. He's talking mostly about the idea of participation in the U.S. is 0.5% in the gold and silver market. Imagine if that, as the need for gold and silver becomes apparent, the rush into that, and it moves up to 2.5%. You're looking at 4 times the current price.
Yes.
Which puts us into the 9,000 level. Now, we don't have to see a 16-to-1 ratio gold to silver or silver to gold. For our regular listeners, you know what we're talking about. If you're new to the show, welcome. But at $9,000 gold, we're talking well over $200 an ounce for silver.
Mm-hmm.
That is generational wealth building type of changes.
Yes.
So that's why we're so excited about this market, because the stock market, we don't get the impression like it's going to fall tomorrow if you're just looking at the surface.
Mm-hmm. Exactly. You know what? Your point as far as the underperformance or the lack of participation in the gold and the silver market is highlighted with this new survey that came out from the American Association of Individual Investors. It came out just yesterday, and it surveys its members monthly as to their asset allocation. Where are these American investors putting their money? Well, guess what? It's the traditional stock, bonds, cash approach. There is literally no percentage of gold, so that 0.5% is correct. And what this is showing, that this is peak complacent investment behavior at a point where we are at an equity market top. And when you're thinking of the participation in gold, if 1% of all that sloshing money jumps into an undervalued gold and silver market, the market of finite, scarce, and rare gold and silver is going to be so explosive. And at a point where we have even JP Morgan predicting a huge U.S. stock market crash just this week. I mean, this is where they make their money. Leading global investment bank J.P. Morgan has predicted a major stock market crash. The bank remains cautious about the S&P 5, noting a 20 to 23% market downturn. This is where you have to realize how overvalued. Do I want to roll the dice with my wealth? Do I want to stay in something that is overvalued, or should I look elsewhere to a place that is safe, to a place where central banks are going? And give us a call, Guildhall. We want to allow you to become your own central bank and do as they do. Like Jeremy said before, you don't have to be the Warren Buffett. You just do as they do, and they're acquiring precious metals for these strategic reasons to protect against the devaluation of our paper currencies.
The number 18778 silver, the website guildhallwealth.com. Yeah, the complacency, it shouldn't be a surprise if you consider the fact that the Federal Reserve and everyone involved is basically doing their best to make sure that every single canary is zipped up, muted, and basically there's not one canary anymore. This is like whack-a-mole canaries.
Right.
And if it's one bank going down, okay, we'll try to cover it. We'll print some money. We'll take it out. Where can we lend? Where can we as regulators just quietly brush under the rug that you don't need collateral for this, we'll let you borrow it and try to get the gains, right? We talked about this last week with Japan, where what are they going to do? They've got to sell off, and now they're going to have to chase yield somewhere, right? Pension funds, they're going to have to chase yield. But in the meantime, you've had all these zombie banks. Remember zombie banks at 0% interest? Well, what happens when all of those zombie banks and the interest rates are going higher? How many more zombie banks are there? What happens when their debts roll over? Is NVIDIA going to save them? I don't think so.
No.
So the truth will come to light. And when the truth comes and you've been complacent, you've decided to put your head in the sand, it's too late. It's too late. And as far as the gold and silver market is concerned, it's always better to be a month early than a day late. Listen, if you would have been invested in May, you're doing okay. You've probably overcome your cost of doing business, and we're still mid-July.
That's right.
So great things to come in the market. Jerry, let's talk about interest rates. We know that a lot of people are going to be begging or are already begging for lower interest rates, but is that a good thing?
It's going to be a good and bad thing. Good for the metals market, so I'll talk about that correlation, and not good for any other market, specifically the stock market. So just this week, or today, in fact, we're recording on the Friday, gold and silver popped higher after the jobs data that came out today that showed the U.S. government created larger than expected jobs in June. However, the government also said that 111,000 fewer jobs were created in May and April than originally reported. So once again, the whack-a-mole, they're muting. They are constantly revising these jobs figures down. So this is clearly indicating, according to the chief investment officer at Zay Capital Markets, that the data clearly indicates that the Fed is facing significant challenges as the economy continues to deteriorate. Also says that the Fed needs to act now, cut interest rates before being responsible for another self-inflicting injury. So all eyes are focused on the Federal Reserve, who is responsible for controlling short-term interest rates. So which is why we follow what's going on in the U.S. So looking forward into next week, the U.S., we're going to be listening to the U.S. Federal Chair, Jay Powell. He's testifying before the Senate Banking Committee. He's going to be grilled, Jeremy. He's going to be grilled by John Kennedy, even Elizabeth Warren, the Democrat. She wanted to cut interest rates. She's screaming, along with BlackRock, for cuts.
But if you cut rates, you're letting go of inflation. And they're doing their best to fight inflation. I'm playing devil's advocate.
That's
here.
right.
So what do you do? If you're Jerome Powell, what are you saying to that? Or is that what you're saying, I should say?
He's treading a very fine line. He's got to tread water very lightly. He has to indicate that he's tackling inflation, even though inflation continues to rise. But they're going to have to cut eventually.
What happens every time they cut?
So according to Nick Majuli, he's the chief operating officer at Ritz-Holt Wealth Management, he graphed the performance of the S&P 500. So for everyone who thinks that there's going to be a relief rally, maybe for you as a homeowner, but for stock investment portfolios, maybe not. because of the S&P 5 for 1 year after each of the 29 Federal Reserve rate cuts from 1994 to March 2020, the stocks were down approximately 10% plus after rate cuts. So again, the market's trying to tell you there's going to be a relief rally in the stock market. That's not the case, because usually interest rate cuts, what is it? It's an emergency measure. Something's going on in the world. Something's boiling over. Something's bubbling up and about to pop. But the thing that's going to pop for us is the gold and silver markets, because the minute that they cut interest rates, the U.S. dollar index, which is a basket of currency versus the U.S. dollar, begins to drop. And gold and silver are inversely correlated to the U.S. dollar. So expect gold and silver to continue to march higher, even in May, and go away. We're going to be performing much higher, and participation will come into the market even more so.
It's really interesting to think about the idea that any cut from the Federal Reserve at this point could be an indicator of something panicky under the surface.
What could it be?
Right? That they want to keep an air of, we're under control, we like where we are, we're, information dependent or data dependent, but if they lower a rate at any point, that could be a symbol, an indicator that things are going wrong beneath the surface, and that's all we really have to go on.
Well, I think the major canary in the coal mine last week was the FDIC, who sounded a warning with the four largest derivative banks, from Goldman Sachs, Citibank, JP Morgan, Bank of America. They have no plans to wind down their derivatives book, and that is a major concern for the Deposit Insurance Corporation. The canary in the coal mine is alive, and the FDIC spoke.
We're going to have to talk about that a little bit later. In the next segment, if you're thinking about getting a lab-grown diamond, you want to listen to the next segment. The number, 18778 Silver. The website, guildhallwealth.com. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number, 18778 Silver, and the website, guildhallwealth.com. Jerry, I was watching this documentary called Nothing Lasts Forever, I think it was called, and it was effectively about the man-made diamond market, the lab-grown. And it was very interesting, because I bet when you say lab-grown diamonds, you think of a very pristine, no, it's very industrial. It's these massive metal pressurized things, and they showed one in China. And I don't know if you've ever seen Raiders of the Lost Ark at the very end, when they put the Ark away and then they pan out at how big all the top secret stuff was.
I remember.
It was like that. They just kept panning out at all of these machines making these man-made diamonds. And it was very interesting to understand the debate of man-made, lab-grown versus real or earth-made. Billions of years it takes for the God-made diamonds. And, basically what it came down to, in my mind, I'm going to filter this out for you and show you what I'm saying. Imagine going into Louis Vuitton and they show you a bag for $8,000 and they say, we have this bag, it's $8,000, it's very beautiful. I also have the exact same version of it. It's a knockoff, but we sell it here, and it's $800. What would you do? What does that say? What does that say about Louis Vuitton? Imagine going into a Rolex store, and they say, here is a Daytona, and it's $25,000, but I have the reverse-engineered knockoff that you can get for $2,500. Mm-hmm. Now, what if you, at that point, since you already are like, what are you guys doing?
Yeah.
Right? What are you doing to yourselves?
Adding concern.
You're not really adding value to this proposition when you're willing to undermine it, right? And cannibalize it. But what if I told you that you might not know if some of the real Rolexes that you're buying are the knockoffs.
Right. Very dangerous.
Right? So you've let the knockoff business enter into your store, mm-hmm. right? And look at what it's done to your store. Mm-hmm. Pretty crazy.
Yeah, it's added concern to the real product. To the
so
real
when you
item.
think about a retail store right now that's selling the synthetics, what are they doing?
I don't know.
What are they doing to themselves? You are ruining your own market, which is what they've done. So you've self-inflicted that wound. Good for you. I'm getting somewhere with this, okay? So, okay. Now that said, you've also added all of these people who are making money with the lab-grown diamonds. I remember when they were selling at a 30% discount to the real ones.
Yeah.
Now they're selling at an 80 to 90% discount to the real things. And here's the real problem. Everyone's walking around with 3-carat white diamonds, right? That they didn't earn, right? They didn't really get the value for it, but it's all costume jewelry now. It's all costume jewelry. Good, you've got your 3-carat. You didn't earn it, right? Your husband didn't earn it. Right. And that's okay. It's totally okay. I think that proves the rise of alternative stones that you could get, different gemstones that you could get at lesser prices, and you want the real thing. But what's going to happen is a backlash. The backlash is real is rare, and people are already quickly coming to realize that you don't get anything if you try to sell that down the road, right? What's it worth down the road? Nothing.
That's right.
Right? The real Rolex is. The real Louis Vuitton bag is worth something. The knockoff versions, even if those stores were selling them, are not going to be worth anything.
Right.
Right? And if I was the salesperson, that's what I'd be telling them. Right? So one of the things that I really think is going to happen is that people are going to start to say, no, I want the real thing. I'm willing to go smaller to prove that I've got the real thing. But do I really want the white now? Because the man-made lab-grown diamonds have ruined the white diamond market. And if you've seen them make the colored diamonds, it's not the same. Right? It's it's just not the same. So I think it's going to be a amazing action for the colored diamond market. Yeah. Because I could see easily, why would I spend $25,000 on a white diamond ring, or for the synthetic that I might get, the larger synthetic for $25,000, when I could get a real yellow for $25,000. Yeah. And there'll be a lot less questions, right? Exactly. No one's going to look at you and say, oh, you only got the 1 carat? You're like, listen, I got a 1 carat intense yellow.
I'll show you the rarity report with this one.
Yeah, you want to know how rare that is? Cushion and radiant cuts, you're looking at 100 a year. 100 a year.
If that.
How many of those 3-carat, right? No one's going to ask those questions, but you know, and that's the whole point.
That is the whole point.
And at Guildhall, what we've always done is go for the highest quality diamonds, because the better the quality, the more rare. Color is also obviously going to be extremely important. But even in color, is that intense yellow closer to the vivid or closer to a fancy? We want to try to get as close to the vivids as possible, and those have turned out to be diamonds that have continued to rise in value or maintain their value. Doesn't matter if you have the crisis of 1987, if you have the dot-com bubble, the 2008 crash, or the next crash that's coming.
That's right.
These diamonds do not care, because these diamonds don't have debt. You own them outright. They're very rare. You have no troubles, no thoughts about it, right? So if you like GICs, for instance, you're willing to put the money away and not think about it for a long time, or something that you're looking to actually pass on through the generations. You want to give them money? What's that going to be worth in 20 years, right? You want to give them an asset that can continue to perform, and the rarity of the natural fancy colored diamonds, even the yellows.
It matters.
It does matter. Real is rare. The number, 18778 silver. The website, guildhallwealth.com. We got a lot more to come. I want to talk about central banks in the next segment. I want to get back to this Fed issue and a lot more. Zimbabwe, how are they doing with their gold standard?
I got to get into that.
The number, 18778 silver. The website, guildhallwealth.com. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number, 18778 silver. The website, guildhallwealth.com. We were just talking about, the people who will be pro man-made synthetic, they'll say, it's got the same components. And we were saying, like the Mona Lisa, it's a perfect replica. Like, no. And the best one was, you can get farmed salmon or you could get wild salmon, but it's got a tail, it's got eyes, It swims. You can eat it. It's
Well, it's not the
it's
real
a
thing.
salmon.
I'm
It's a
not-
salmon. It's
give me the
just
wild.
not the same. It's just not the same. Absolutely not. And one is better for you.
Exactly.
And one is more expensive.
More expensive because it's that much rarer than the farm made.
Listen, you've seen about the wine knockoffs too, right?
Of course.
Yeah. Some people want real. Some people want real. Some people, it's to each their own.
Yes.
To each their own. Anyway, some more stories next week.
For sure. Now I was going through, you're scrolling the Instagram channel. And I saw, I follow a guy named, shout out Chef Hassan, a good friend of mine. He's a chef here in Toronto, and he went back home to his homeland of Nigeria, and he was, buying some food for his for some recipe, and he was just filming on how the prices of everything was going through the roof. The empty shelves and how difficult life was now in Nigeria, very similar to what we're seeing in Kenya, and this is happening globally. And so it's just a good reminder that the prices that we're seeing here in Toronto and Canada and surrounding areas, it's not just here, it's not isolated here. It's a global currency problem that everyone is experiencing, no matter where you are in the world. This is happening. But as a reminder, the solution was quickly realized a few months ago. Zimbabwe, which has become synonymous with runaway inflation, is now contending with deflation. Prices are rapidly dropping with their new currency. Now they're protecting the currency. Neighbor of Zambia is saying, we're going to jail you for using US dollars. There's that defensive of their gold-backed currency. Zimbabwe's new currency, the ZiG, valued versus US dollar, when it was launched on April 5th, consumer prices fell immediately, 2.4% in May, a month earlier, according to the National Statistics Agency. And what drew my attention to Nigeria is that the officials in Nigeria, and this is coming according to the Gold Telegraph, Nigerian officials in April decided to repatriate their country's gold in April. The continent of Africa, we're seeing a massive revolution in Africa, a very exciting one that could not happen a decade ago. When you had Muammar Gaddafi, who wanted to create a gold dinar and an African Union, heck no, he was assassinated. He was taken down. But
today they're emboldened. Today they're not worried about those type of consequences.
Exactly.
Even though the U.S. has weaponized its dollar against countries.
That's right.
The question is will they do it to more?
And what's interesting about the monetary authorities forecasting monthly inflation by the year end, they forecast inflation in Zimbabwe to be around 2 to 5%. Think how quickly and rapidly that happened with the solution, a gold-backed currency. When you fix the currency, this is what the stability that will come with it.
Now, on the heels of that, Jan Nieuwenhuis came out with some information about the Dutch National Bank, because this past week they invited a bunch of journalists to effectively audit the gold. But I just want to quickly reiterate what the Dutch National Bank has said about gold through Jan Nieuwenhuis's tweet earlier this week. He said, in May 2023, the DNB said, gold is the ultimate anchor of trust. If the entire financial system collapses, you still have the gold and the gold retains its value. In 2022, the DNB governor, Klaas Knot, mentioned the balance sheet of the Dutch central bank is solid because we also have gold reserves, and the gold revaluation account is more than 20 billion euros. He said this in response to a question about the DNB's losses due to unconventional monetary policy. Again, going back even further, they said gold is the perfect piggy bank. It's the anchor of trust for the financial system. If the system collapses, the gold stock can serve as a basis to build it back up.
There you go.
So why else do you think central banks are buying gold? The question is why, if the trend is good for them, isn't it good for you?
The foundation is rattling, Jeremy. And when the foundation shakes, just like back in March, the BRICS were launched and developed a payment system. The M-payment system, the M-Bridge payment system. They launched the unit ecosystem, which is the new global currency alternative backed by 40% of gold. And when the foundation rattles, gold reigns supreme on the resets chessboard. It serves as the most strategic piece in this intricate puzzle. Yes, the BRIC nations, they never really got along with each other, many of the nations, but with a common foundation of gold trust, we can continue to have business together, we continue to have relations together, and we can find trust in a trustless society. Gold offers that.
The number 18778 silver, the website guildhallwealth.com. With Guildhall, you can buy it direct, gold and silver. You can go to our e-store, Guildhall Precious Metals, and pick up a tube of silver maples, maybe a couple 10-ounce bars, maybe your first ounce of gold. It's a great way to understand pricing, understand what this market really is all about, and then you can kind of take it from there. Maybe you want to have a depository account or hold it in a TFSA. We'll help you with all of that. If you've missed one of our shows, you can catch us on Rumble. You can catch us on YouTube. Just look up Guildhall Wealth or The Real Money Show. And, of course, you can follow us on X. We want to thank everyone for joining us this week. Jerry, thank you. Great discussion. We can't wait to speak to all of you next week here on The Real Money Show on 640 Toronto.